Hey everyone, I'm Daniel Rondberg, and in this video, I'm going to break down the top 3 questions I get asked every single day about annuities. And so number 1 has to be by far, what is an annuity? There's this great mystery around this product, and I don't really understand why. It's a very, very old and institutionally established program. It's basically a form of a way you can get some guaranteed lifetime income. Now, every time I mention the word guaranteed, it's obviously up to the claims paying ability of the company, and it's a contractual guarantee. So an annuity at its core is really just a promise from an insurance company to provide a guaranteed stream of lifetime income. And so I always tell my clients annuities really just do 2 things at their core. Now, they do a lot more. They have all these features and bells and whistles and riders you can add, but at their core, they really just do 2 things. They're going to give you some principal protection or some type of contractual guarantee of your money, and they're going to give you a contractual guaranteed lifetime income stream. That's really all they do. I mean, it can get a lot more intricate, but it can really just be that simple. And so for people who are looking to retire and they're going to need some form of income or some type of optimization strategy from their current financial product to make sure they have income for the rest of their life that they can't outlive, this is where the annuity will fit. When people ask me what is an annuity, you could think of it like a pension. You could think of it like Social Security. In fact, some people call Social Security America's favorite annuity. What's interesting to me that's going to lead into number 2 is I constantly get asked, well, aren't annuities bad? And I think that's so strange because not only am I someone who helps clients to set up annuities properly for their retirement, but I think that's strange because I don't really look at financial tools as good or bad. I've used different financial tools personally. Now, being somebody who's in their 30s, I'm using tools that are a little bit different from somebody who's maybe in their 50s or 60s who's looking to accomplish different goals, has a different time horizon and a different risk capacity. But I don't generally look at financial products as good or bad. In fact, I just look at them as tools. They do a job and that's all they're supposed to do. I think when people put this connotation of good or bad, that comes from a root of a marketing spin. Someone out there has put some type of slant on something to divide and conquer and say this is bad, this is good, stay away from this, buy this. So I think that concept of bad really should disqualify whoever you're getting that information from as objective, because you can't really put a subjective to just like a tool. It's not good or bad, it's just how you use it. And I think what the problem with annuities, they get sold incorrectly or they get oversold, and maybe they're sold for someone who maybe needed a different outcome to occur and they got an annuity from an agent instead. I think that's a problem, and I think that's where you can get into a situation where you may feel that an annuity is bad. But at its core, it's not bad at all. And in fact, like I was referencing earlier, people, when you talk about their pensions, they almost light up. They get this warm glow, this nostalgia, this great comforting feeling, because our country used to be so phenomenal in terms of creating great breadwinner wages that then would provide a guaranteed stream of lifetime income through a pension to that employee and their spouse. And you know what? Nobody was running out of money. There was no such thing as a retirement crisis. But then all of a sudden we shift to 401ks, and companies realize, hey, it's much easier to match this 401k contribution for an employee who wants to contribute than provide them with a guaranteed lifetime income for the rest of their life while people are living longer and their spouses. So the 401k comes along, and so we transfer the burden of retirement savings and retirement income distribution to the employee. Well, what happens? Fast forward to today, there's a retirement crisis, there's a baby boomer crisis, there's movie after article coming out about how people are running out of money. In fact, the number 1 fear amongst seniors, by far, ranked every year by AARP, is not death, it's running out of money. And so people had pensions once upon a time that they loved. Now they have 401ks, and they have the option of purchasing an annuity to transfer the risk of them outliving their money or overspending to the insurance company in exchange for a contractually guaranteed lifetime stream of income payments. Essentially, they're creating their own version of a pension. But yet annuities are bad. People love their pensions, hate annuities. That's why it doesn't make any sense. And so really, if you're somebody who's approaching retirement or in retirement and you're concerned about, well, will I have enough, or will I be able to spend confidently, will I leave too much? If you're trying to optimize that income distribution, really the contractual guarantees from a lifetime income annuity are the only vehicle that can do that, because they can give you that promise that you can spend each month and it'll come back in the next month for as long as you live. Even if you run out of money, you won't run out of income. So that's really crucial and important that I want to touch on. And number 3 has to be, well, I heard annuities are really expensive or they're really high in fees. And again, this is where the waters can get kind of muddied. I really feel like this comes from some marketing efforts to try to sway people one way or another. Annuities can be no fee products. They can be spread products. They can just have no fees. Now, annuities do sometimes have surrender charges, meaning that if you take out an annuity, they might have a term of 5 years, 7 years, 10 years, 15 years. And if you take out all your principal during that term, you'll pay a surrender charge. Generally, not always, but generally with some types of annuities, the surrender charges can be high. But that's not a fee that you incur. That's only a fee that you incur if you want to give up your lifetime income stream and walk away. Sometimes they can have rider fees or different costs associated with the policy, but those are optional. You get to choose if you want those fees. And if you take one of those fees, you generally get a really strong benefit. Not always a strong benefit, it depends on what company you go with. But if you choose a product that has a really strong benefit for your fee, you can make sure that you can add an additional guarantee to your policy, whether that's a higher increase for future lifetime income or possibly a death benefit. Maybe benefits that'll pay out specifically for if you need some type of care event like long-term care. They can have fees, but they don't always have fees. And so this is where I think we've done a huge disservice to the modern retiree. We have this retirement crisis. We have a lot of people that haven't saved enough and need to maximize every single dollar they possibly can. And yet we're discouraging people from looking at tools like annuities. Now, I'll give you a quick disclaimer. I don't think annuities are right for every single person. I meet a lot of people and I recommend that they don't use an annuity at all. It doesn't make sense for them for one reason or another. But in certain circumstances, for the person who's saying, look, I have what I have, I can't take the same risk I was taking before, I need to optimize these withdrawals, and I need some comfort and peace of mind knowing that my income for my core basic needs and expenses is going to be met by a guaranteed steady paycheck for the rest of my life. That's where the annuity fits, and that's where it can be good. One little tip I'll leave you with too that I think is really interesting is whenever you're being proposed an annuity from an agent, every illustration has a current assumption of what the annuity could possibly earn. If it's like an indexed annuity that could potentially earn index credits or interest based on performance, and then that same type of illustration will have a guaranteed section. So I always tell my clients, look, if you're happy with the guaranteed section, then you're going to be really happy with the potential upside performance as well. So just flip open those illustrations to the guarantee. If you like them at the guarantee they illustrate, then you'll like the annuity and you won't be disappointed or have any surprises. So that's one thing I always like to share as a little tip when you're shopping for annuities or looking to see which one's right for you. Take a look at that guarantee page because that's going to give you some really powerful insights into will you be disappointed or not. And if you're happy with the guarantees, I really feel like it's going to be hard to be disappointed with something that will beat those guarantees. And so in the illustration, it'll show you like worst case scenario you can even put in there. Again, that's a really key metric to determine are you making the right decision. But again, focus on the big picture. Do you have that key retirement risk? Are you at risk of running out of money, not managing your withdrawals properly, or what's even in my mind worse, the psychological effect of not fully enjoying your retirement? So many people I meet are living with a scarcity mindset that we don't want to do this year because we might run out of money, or we don't want to spend this because I need this, or I can't really afford to do this. All of that, I can't, I shouldn't, I'll wait. Life is really short. I've learned that, especially over the last couple of years, losing a few friends of mine, and I wanted my messages to just encourage people to set up the right types of plans where you can spend confidently. Give yourself that permission to be able to enjoy your money as well as meet all your basic needs in retirement and remove the key risks. So if you're looking for a tool like that, an annuity may be appropriate. Now I'm going to do more videos on types of annuities. There's all kinds. We're going to go deep on this channel on different types of annuities, life insurance products, hybrid products, hybrid annuities. It's going to be really fun. So check those videos out later. But if you have any questions, please feel free to put them in the comment section below. And if you like this channel, you like our content, you want to have a suggestion on another video, please feel free to leave a comment, subscribe, like this video, share it so I can help spread my mission and message to more people so we can get our seniors protected so they can have the retirement they deserve. Thanks again. I'll see you in the next video.